Welcome back, everyone. Today's topic is all about liquidity and understanding basically what our approach is for going forward for not just the Philippines, but from a global aspect. Um, just to summarize things, obviously the main economy is much more difficult, and we expect this to persist in the short term. The only positive thing that we're seeing today, and that's why the name of this presentation is called Liquidity, it's because the Fed has been pump priming the entire economy. Um, we're trying not to excite people too much nor create a panic or a bubble in that situation, but it's very important to understand both the good and the bad. And so I want you guys to understand how this will benefit you guys in the short term, which we think will likely provide a lot of opportunities. And without further ado, Jason, take it away.
Hi guys. So I think we have a very good topic today because especially with what's happening recently, that fundamentals have really taken a back seat, right? So it's not really about earnings anymore. It's not about GDP growth. Especially today, I think the major factor that's driving the markets is liquidity. Okay, so liquidity is just really the amount of money in the system. It's money creation. Okay. Uh, Okay, so let's recap what happened in the past few months. So it's been a roller coaster. There's no better way to describe it. Diba? So I think what's happened today is that the Fed and the other major central banks, that's the ECB, the BOJ, and the BOE, Bank of England, they've successfully prevented a major credit crisis from happening. Okay, so I think everybody knows about this. I won't delve into too much detail anymore kasi nakakasawa na to. But yeah, we're still, COVID-19 is still getting worse. Okay, so today I think we're still hitting new highs in terms of daily new cases, 13.2 million already, confirmed cases globally. Okay, so this is what happened in March, right? Then the markets panicked, and then late March. So I think this is the defining statement by the Fed. And after this, everything's back to the races once again. Diba? So sabi ng Fed, okay, we're not going to run out of ammunition. Okay, whatever it takes to save this market, whatever trillions, then I will provide it to the market. Okay, so after that, so parang naging bull market na ulit in US. Okay, so this is basically it. Just Jay Powell, Superman. So that's what happened in the past few months. Okay, so if you look at the amount of money being printed just in the past few months, it's already way more than what happened in 2008. So if you're going back here in 2008, parang ang liit lang ng increase ng balance sheet ng Fed versus today. So I think that the Fed is on track to double their balance sheet within the year. Okay, and if you combine the G4 central bank balance sheets, so this is from JPM. So what he said that by mid 2021, the major central banks are going to create 15 trillion of paper money. Okay, so let me repeat that. They're gonna create 15 trillion of money. Okay, so that's definitely going to inflate everything. Kasi pag gumawa ka ng pera, it has to go somewhere, right? And obviously, it's been going to stocks. So it's not just creating liquidity and lowering rates. So we have record spending from everywhere. Okay, so what they did was, okay, zero rates, then that spend a lot of money. It's technically free anyway, right? So if you look at this chart here, the developed markets have all exploded their fiscal deficit. So Japan is the first place here, 20% fiscal deficit. So they recently, to last May 27, they doubled their fiscal spending package from 1 trillion magiging $2 trillion. So that's huge. Okay, and I think this is a key difference actually with what's happening in the Philippines or other emerging markets who don't have the spending power. Okay, so I think that's very important. Okay. Okay, so I have a lot of acronyms here. So basically, you have ZIRP, zero interest rate policy, QE unlimited, has led to a situation, what we call TINA. There is no alternative to stocks. Okay, everything is zero rates, right? So you buy bonds, zero rates. So where's the money gonna go? Okay, so it's obviously been going to the stock market and especially to the tech stocks. So as represented by the Nasdaq Composite Index. Okay, so this is the Fed funds rate. So from around 2 last year, basically zero. Okay, so money is free and there's nowhere to go but to stocks. And marami din umakyat. For example, gold, silver, precious metals. So we're going to talk about that later.
Can I just add something really quick? It's also in relation to what you're seeing here in the Philippines. Just to emphasize what Jason was talking about, you're seeing a lot of spending fiscal packages outside. And if you look at it, you'll be hearing about clean energy, electric car vehicles, so even solar. And all these packages outside are all intended to stimulate the economy. And I think that's really the right approach that most of these countries are doing. The challenge really is in the Philippines, where are we going to be spending it on, right? So you're supposed to be looking at the infrastructure package and just to stimulate the economy, and we're not seeing that yet. And I think that's the reason why emerging markets such as the Philippines have been lagging everywhere else, right? So don't think that the market is stupid. To some extent, the market is very efficient, and the market knows where the money is flowing. So our point here is that just focus where which sectors will likely benefit going forward, and you'll probably see this maintain this. There's no alternative, Tina, for the foreseeable future.
Okay. Next, I think maybe you guys are not familiar with this, but you see, I said a while ago that the Fed has prevented the credit crisis. So this is really in the corporate bonds. So syempre, when the COVID hit, nagka-problema yung cash flows ng companies. So of course, that's going to be a huge problem, right? So when you look at corporate bonds, you look at the spreads. So this is the premium that you attach to corporate bonds versus the risk-free asset. So for example, if the corporate bonds corporate credit spread is 10%, then you have to borrow 10 plus the risk-free rate, right? So in March, corporate credit spreads exploded, but because of the Fed, you're going to see here that the spreads are normalizing once again. So meaning, nawala na yung stress ng credit market. Okay, so I think big picture, we may have seen the shortest bear market ever. So of course, ang dami pwede mangyari, but the way we see it is that the March lows in global markets will probably not be seen anymore. Okay, I really think that the cycle, the bull market that started in 2009 is gonna extend even more. Okay, so in terms of, kasi everyone's spending zero rates, diba? Everyone's borrowing money for free. So most likely that's going to lead to a new bull market. So that's why liquidity is the best leading indicator of stocks. Meaning if liquidity is going up, then that's a good environment for stocks. Diba? Okay, so to make it very simple, I think the stock market's really just about liquidity. It's just about the Fed. So are they hawkish or dovish? So ganun lang siya. Diba? Okay, so this is from my favorite global macro trader, Stanley Druckenmiller. So sabi niya, ayun nga, so short term, hindi importante yung fundamentals na yan. Earnings don't move the market. It's not earnings, GDP growth, they don't move the market, it's liquidity. Okay, so focus on what central banks are doing and the movement of liquidity. Okay, most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets. Okay, so This is from a very old article, 1988. Diba? So yun nga. So given this framework that is all about liquidity, the best environment for stocks is hindi yung boom times yung economy. So counterintuitively, you want to be in a slow, dull economy like what's happening today, diba? Kasi yung Fed kakampi mo siya. Diba? The Fed is on your side, stimulating the markets. Okay. Okay. So what's gonna happen next? Okay. So I think that if you read the online, a lot of people are comparing what's happening today to the tech bubble, and I really can't blame them. Okay. Kasi for one, tech yung malakas, diba? They're the leaders in the market, and during that time, this is tech, this is the whole market, diba? So it's a huge outperformance. But there's one more similarity. So you also had the long bull market. This is 5, 6 years of bull market, diba? And then you had the crisis here. So actually, this one is not in the U.S. It's in Asia. Diba? There was the Asian financial crisis, and there was this LCTM, long-term capital management. It's a gigantic hedge fund, levered, I don't know, 30, 40 times. So yung assets niya in the trillions. So natamaan sila dito ng Asian financial crisis, and there was a danger that it could blow up the market kasi ang laki ng mga posisyon nila. Okay? So what happened then was that, okay, bumaba yung market in 20-25%, and then the Fed cut rates. Okay, so this is in the middle of a bull market already. So syempre, the animal spirits were very strong, then it became a bubble. Okay, so I think that today we're in a similar environment. But of course, I could be wrong, but we think that we're in a similar environment.
Yeah, I think just to add, I'm not sure if we're going to talk about it later, but just to add, today you're seeing outrageous amounts of price to sales, not even PE ratio. So like your cybersecurity stocks, Zscaler, Crowd, CRWD, most of these guys are trading at 35 to 40 times price to sales. And these are ridiculous amounts of levels already. And you have stocks, for example, like Shopify trading at 100 times price to sales. And the problem is because liquidity today and interest rates today are at 0%. And that's why we keep on talking about how liquidity is creating so much, I mean, even creating even bigger bubbles than what we're seeing before, right? So I think the aspect that I'd like to point out here, despite Jason being very positive, is remember what we're seeing is very short term in nature. And we want you guys to understand that even though we think that there's a bigger problem going to happen down the road, our outlook in this entire environment is very short term in nature. So please understand that when things change, things can change all of a sudden. Okay, so go ahead, Jason.
Okay, so yes, so I think that as Edmund was saying, parang okay, the solution of the central banks is to create an even bigger bubble by printing so much money. And I'm pretty sure like there's going to be something down the road, like maybe another COVID-19, whatever, that's gonna, catalyze the bear market. Okay, but today, I think things change very fast. And with the unlimited amounts of liquidity, so I just have to assume that's going to be a bull market. Okay, so of course that's a big picture. Okay, but in the short term, I think that everything's way overbought. I mean, for those of you who've been following my past few articles, parang silang plaka na paulit-ulit, everything's just so overbought. Okay, and I think we have to watch out for volatility in the short term. Okay, I guess just a recap of what happened. So this is from the very top. So looking at stocks versus bonds versus gold. So this is 1 year. So what you will notice here is that yung nag-outperform talaga is gold miners, up 40% for the past year. Gold up 26%. your bonds, 10-year, 20-year bonds. In 20-year bonds is up 27%. Okay, and this is the broad market, is the SPX. It's basically flat for the past year. Okay, so something to highlight here is that parang yung tech mo, because of what's happening today, is the new defensive. Kasi parang same yung performance sa bonds and gold. Okay, so deep on one level down on a sectoral basis. So I think that we're still dealing with a very rational market, despite severely overbought, but very rational. What do I mean? I mean, yung mga COVID defensive, tech, uh, cloud, cloud computing, online retail like Amazon, software, those are the ones really that's going up. Okay, so ito yung mga yan. Yung mga real economy sectors, COVID cyclicals, are down here. Just oversold bounce, but that's it. Okay, and if you look at yung mga pinakapalela dito is airlines, for example, financials, okay, mortgage, and commercial real estate, they are still down 50% for the past year. Okay, and then intermarket basis naman. So if you're gonna look at Asia, sino yung malakas dito are those countries that have handled COVID-19 well. So you have your China, your Taiwan, your Korea, diba? And while yung mga Indonesia, Philippines are lagging behind. So it's two things, yun nga, the handling of the COVID-19 pandemic, and second, yung firepower in terms of stimulating the economy. So this is what Edwin was saying, that the market is, you might think it's a bubble, but it's very, very efficient. Okay, so I think going forward, if you're gonna ask me, am I gonna hit the laggards, or you just wait for the leaders to show a correction, then enter again? Ako definitely go with the leaders, diba? Kasi as we saw with the COVID numbers, it's still going up. Okay, so this is the NYSE FANG index. So these are your mega cap tech stocks like Apple, Microsoft, Google, Amazon. So they have a crazy increase in the past 3 months, double. Okay, and I think that's way overbought. Okay, so we always, diba sa technicals, we look at the distance actually from the price versus 200-day. It's huge. And even in the past 2 weeks, the distance of this price versus the 20-day average is huge. So in that way, parang rubber band yung market. It's been stretched way, way too much to the upside. So I think it's ripe for a correction. And that's why we're seeing the increased volatility in the past few weeks. Okay, so here's Tesla again. Naalala ko nung February or March, before the market dropped, we were talking about the crazy increase in Tesla and how it's really a barometer of the sentiment of the US market kasi favorite to ng mga retail traders. So Tesla has increased 400% just in the past few months. And at the peak dito, 80%. I mean, from here to here, this is 80%. So for me, it's looking like a climax run. Na parang, okay, just chase the best performing stock, FOMO buying. Okay. And if you look at Robinhood accounts now, so these are a lot of what retail traders use. 40,000 accounts bought in this day, during this day. Okay, so nahuli ata sila. Diba? So if the stock doesn't recover in the next few days, okay, I think these are going to be lambs for slaughter. Okay. I guess just to show some perspective on how grabe na yung sentiment talaga. Like for example, this Tesla, it's bigger than the Toyota, Volkswagen, and Honda in terms of market cap. Okay. And if you compare the revenues of Tesla versus Toyota, sobrang layo. Okay, I think times 10. Times 10. So Tesla revenue last year was only 26 billion. Okay, and if you look at this on the left, JPMorgan, Tesla's already bigger than JPMorgan. Okay, and JPMorgan makes 30 billion a year. Okay. Tesla net loss. Okay. Okay. Lastly, I think signs of the times. Kasi parang nauso sa retail traders trading in the US. So I think it's the same in the Philippines, diba? Kasi people are staying at home, diba? So mantra niya is stocks only go up, only losers take profits. Okay, so for me, I think these are really signs of the times. Maybe overbought. So last slide. So these are the allocation of tao to stocks. So I think it's recovered already significantly from the March lows. And so this is another nice chart here. The ratio of growth to value, I think it's to the moon of the charts. Okay, so everything's really just way overbought. And hopefully we get a correction maybe in the next few weeks, months. And sana end of the year, we get another round in these tech stocks. So just keep an eye on Leonard's picks. I think a lot of them, like for example, Plug Power, really went up so much. Okay, we post it on our website every time we see something new. Okay, so like these are some of them, and may mga konting picks na dito. Okay, like for example, this Plug Power, double already. So I guess just keep your eyes on the website for updates.
Yeah, I'm don't think that what's happening today is coming as a surprise. Basically, people are just looking for areas for speculation and new themes that will probably benefit from this spending. As regards to the Philippines, and that's the reason why your Philippines has been lagging, but just a level of precaution. It's because most of the new investors have never experienced anything like this before. And that's why you're seeing a huge speculative mania happening outside. Okay. In fact, ang daming bagong retail accounts opening also in the Philippines. Same case because most people are working from home. And that's why we saw also a 200%, I think it's 200% increase in number of account openings. This is nothing as a surprise. The problem is today is that the level of stocks that you're speculating in the Philippines, for example, the last few days, you had GMA7, MRC, ano isa, Jason? TBGI. And I have no idea why people are still speculating in these basuras, especially when there's nothing in most of these guys. And I assume it's because they just moved that day. That's why people are just overflowing and going also. But I'm just warning you guys to just be extra careful speculating in all these basuras and understand that most of these guys have no stories and nothing to back it up. It's very different from when you're speculating outside. It's because most of outside is driven by stories and mostly qualitative ideas, regardless of whether most of these guys are unprofitable or not, like with what you're seeing with Tesla. Okay? Some other stocks and ideas and stock picks will likely be posting, like what Jason said. One thing I always caution people is be careful of shorting. It's very easy for people to take the other side, especially in an overbought situation such as today. And I understand that a lot of people are thinking na overbought na eh, mahal na, right? So we can start shorting and go against what the crowd wisdom is talking about. And I totally understand why, because if you read the newspaper and you look at the real economy, nakakatakot talaga. Pandemic, record high. Singapore GDP down 12.5% year on year. And as we get into earnings season, especially for second quarter, I'm telling you, pangit lahat yan. Okay? I'll actually be finishing my piece tonight, and hopefully tomorrow morning I'll be able to upload it also into the website. Basically my views on 2Q season, because including especially the Philippines, because it's coming about. I'm telling you guys, it's all going to be ugly, and you'll probably see more earning downgrades than upgrades. But nonetheless, to some extent, I feel like most of these are already priced in. Jason already tackled it. As long as there's liquidity and as long as there's fiscal spending, most likely that will be how the market will view going forward. from the next 6 months to 1 year?